Hi, this is Tolan Peterson with MyFirstPlaceNorthwest.org. Today we're going to discuss briefly the potential to refi. So a lot of our first-time home buyers lately that have bought over the last few years have been asking us, should they refi? You know, they're seeing things on the news, they're getting mailers in the mail from different financial institutions saying that they could lower their interest rate, 0.25%, 0.5%. So on the surface this sounds potentially like a good idea. But when you break the numbers down, it may or may not actually benefit you. So we'll look at a quick example here. So let's consider that you're potentially going to lower your interest rate by 0.25%, right? So if you were to do that, let's say that would lower your monthly payment by about $50 a month, or about $600 per year. So again, on the surface, that sounds like a good opportunity, right? $50 a month is $50 a month. However, the equation may change a little bit once you look at the upfront cost. So generally to refi, there's an upfront cost. Even if the lender allows you to roll it into your total loan amount, it's still an upfront cost. So let's assume an upfront cost of about $4,000. So essentially you're spending $4,000 up front to save about $50 a month. So the next thing you have to consider is how long do you plan on living in the home, right? So if you plan on living in the home for 3 years, let's say, this equation may not make sense for you, right? Because if we look at the break-even amount, or the break-even timeline rather, we'll see that if we divide the upfront cost of $4,000 by the annual savings of $600 a year to break even or recoup your upfront cost would take about 6.67 years. So again, if you're looking to only be in the home for the next 3 years, this equation probably doesn't make sense for you. However, if you're looking to live in the home for the next 12 to 15 years, this may start to make more sense. So you can kind of see that there are a lot of different things that come into play, not only just interest rate, but also upfront costs when looking at doing a refi. Another variable I'll throw out there is whether or not you pay mortgage insurance. A few of our first-time home buyers that have bought in the last couple years have seen a lot of market appreciation, to the point where if they refinance and get an appraisal, that appraisal is most likely going to come back with a value that would allow them to drop their mortgage insurance. So you're taking maybe a savings of $50 a month on your interest, but then you're adding into this equation, let's say $250 a month in mortgage insurance that you're going to save. So now you're looking at about $300 a month, right? Or $3,600 per year in savings. So if your upfront cost is still just the $4,000, your break even is just a little over a year. So in this scenario, once we bring the mortgage insurance into play, even if you're only planning on living in the home for the next 3 to 4 years, you could benefit from quite a large savings in this scenario. So basically what we're trying to get at is there's a lot of different variables that come into play when you're looking at not only purchasing a home and what kind of interest rate and what kind of mortgage insurance is going to play a role in your monthly payment, but also further down the line when if you're considering a refinance. There's a lot of different variables to take into play or consideration when coming to that determination. So at the end of the day, when you're speaking with somebody from a financial institution and you're asking them, should I refi? The answer that you're not looking for is, well, yes, because you can lower your interest rate, right? The answer that you're actually looking for is to have that person sit down and give you a breakdown like this. You know, what is your savings going to be, including what is your upfront cost going to be? Are there any other variables that you should be taking into consideration, like mortgage insurance, right? So at the end of the day, you really want a kind of all-inclusive piece of advice, not just a salesman sitting in front of you saying, yeah, you can lower your interest rate, we should do that, right? So that's all we have time for today. We just wanted to kind of give you a brief idea of the things that go into considering a refi. If you'd like to learn more about the home buying process, things that go into the makeup of a mortgage payment, so that you can kind of understand, what your initial purchase will be, and then also does a refi down the road make sense. Please go to www.myfirstplace.org. myfirstplacenorthwest.org. Go to our calendar reservations page, sign up for one of our free first-time home buyer workshops. Thanks so much for stopping by, and we'll catch you next time.